welcome to the Currency Room, Maverick Currency Traders. This is Rob Reinhold. With me is Mr. Ankit Sharma. And here we are going into the back half of July. And I've got to say, we've had two really good trading weeks. It's been encouraging. As you know, May wasn't the greatest month. June was okay. But July is turning out to be really good. In this session, we're going to be talking about the news of the week, what happened. We're going to take a look at the broad markets. Then we're going to dial in a little bit closer here, take a look at all of the currencies, score them +3 from -3 or +3 to -3. And then we take the strongest and we pair them up against the weakness, and those are our target trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start out with the story of equities. We had another break to new all-time highs. I feel like that's just simply something we say every single week now. But I want to talk about the market rotation on Thursday. Over the past 2 months, and I want you to look at these two charts. I'm going to throw up the S&P 500. Here it is. As you can see here, it's just been a gradual uptrend higher. However, when we look under the surface, it's only been a very small number of stocks. Next, I'm going to show you the equal weighted S&P index, the RSP. As you can see here, during that entire time that the quote SPX was moving higher, that the market was moving higher, the underlying regular stock just wasn't going anywhere, and frankly was actually trending down a little bit. You can see that on Thursday we had that wake up. A lot of broadening. So Thursday we saw the NASDAQ go down 2%, but 75% of stocks were up that day. It was a crazy day where you saw 75% of all stocks go up, but the S&P was down 1%. It's just showing you that people were moving out of the large cap tech, and it's broadening out. Here's another chart of the Russell 2000. Take a look at what the Russell 2000 has done. Nothing. Look at this breakout. It is definitely showing that money is flowing into all these other stocks that have been underperforming. Ultimately, it's just more bullish. We were already bullish, but now I'm actually more bullish than I was earlier. We also had the dollar and bonds sell off. Bond yields are down to about 4.2, maybe 4.15. That is great news for the equity markets. So everything is looking good. Gold rebounded. And then we had some pretty crazy moves in Forex this week. And we've been talking about Bank of Japan intervention for about the past month. Now, I've been saying, watch out for it in the overnight session when the Japanese businesses are open. The BOJ was very sneaky, and they timed it right after the CPI report. Ankit, what did you think about that timing for the Bank of Japan?
Yeah, like you said, it was sneaky. I mean, there's one thing, you're looking at U.S. numbers, and right away there was just a massive move. And yeah, it took me a while to figure out, oh, wow, this is actually intervention, not just the U.S. numbers. So again, I have seen Bank of Japan do intervention at all times, so I'm not surprised. I expect from them. Clearly, they haven't done it so in the last few years, but I would expect for them to be more active or like this, because this is where they probably get the most impact, combining with the weaker number out of the U.S.
Well, I'm really excited about this because I've been saying I want to see a nice pop in the end where I can get short again. Because lately it's been a little bit too far, and I'm like, I need to get some relief on this yen. Maybe this is the opportunity. We'll take a look at this when we get into the charts. Last week we did hear from one central bank. We heard from the RBNZ. They came out, kept rates where they were, but they were dovish, and the Kiwi crashed. Kiwi was the weakest currency last week, and it's directly because of what the RBNZ said. Ankit, you and I talked last week about how if the RBNZ came out and they were hawkish, that the Kiwi might catch a bid, and they did just the opposite. What do you think about their statement?
I think again, just a statement and the price action sort of confirmed. As the New Zealand dollar continues to weaken, throughout the week. I mean, we haven't really seen any meaningful bounce there. And then if we take a look at the comparison between the Aussie and Kiwi, I mean, massive breakout there as well. We haven't been at those levels since 2023. So, this is where I say that, if these central banks diverge from each other, I think that's where there's probably a massive move that lies ahead. So I think I like this relative weakness and relative strength between the Aussie and Kiwi here. But yeah, I think that the Kiwi statement that was a week that we got to take note of, as we haven't really seen any meaningful bounce since then. So I think as the central banks diverge, these will continue to play out.
Totally agree on that. And we do have one central bank coming up this week. We did hear from Chairman Powell on Wednesday, and on Wednesday he said there's no reason for the Fed to wait until inflation gets to 2%. The market loved that. And then take a look at this CPI report. The next morning, this CPI report is crazy. We have a negative month-over-month number, and our core was at 0.1. Year-over-year is 3.0. This was great news for the market. The market loved it. And we saw again, this is just pushing the market higher. I do want to talk about two other reports. This PPI report came out on Friday morning, and it was hot. And not just a little hot, a lot hot. 0.4% month over month. Initially, the futures kind of wavered a little bit, but then I was watching them, and pretty much everyone just brushed this off. People are not concerned about this number. This is where good news is good news, bad news is good news. It's all good news, everyone's happy. Last report I want to point out, and I have been very bullish the pound, and I pointed this out. I said if this pound GDP comes out better than expected, it's even better. Sure enough, look at that print, 0.4 from a 0.2 estimate. Great news on the pound. Everything is going the pound's way. We had the election, we had CPI, we had GDP. Everything is looking good for the pound. So let's go in and take a look at the final numbers for the week. And in equities, we take a look, we see, okay, somewhere between 1.5% to 2% across the world. That's a strong move, especially when you take a look at where we've gone. We've pretty much been up every single week for the last 6 or 7 weeks. Crypto bounced back. We're going to take a look at crypto. I've said that crypto has a lot of work to do before it even comes back on my radar as a bullish position. This is the first step. We need a pullback and then a breakout. Then I could get bullish on crypto again. Gold up 1%, oil down 1%. No big deal there. Let's take a look at the S&P. So here we have the S&P chart. We have a clear breakout of a high base, which we got very bullish back here. You can see this bearish engulfing candle, but the market didn't care. The money came right back in. And on Friday, the money came right back into large cap tech. So we got this rotation out of large cap tech on Thursday and into small caps and mid caps. And then on Friday, we just got money going into everything and everywhere. This market is extremely bullish at this moment. If we take a look at the weekly returns on currencies, we see that yen standing out. I love that bounce in the yen. The question is in my mind, is the yen bounce over? Or does it still have a little bit more to go? We'll take a look at that in the charts. We did like dollar short last week. That was our favorite short. And you can see that it performed pretty well. Pound was our favorite trade on the long side, followed by Aussie. So any of those pair crosses would have been fairly good. And you can see CAD underperforming along with the dollar. And of course, we talked about Kiwi. That is likely going to be the nail in the coffin for the Kiwi until the next RBNZ report. I'm not saying it's going to go down every day, but it's definitely going to be a weight on the Kiwi. Coming over here to cryptos, Bitcoin Cash decided to go off for 15%. But look, that's a very narrow traded coin. We're going to take a look mostly at Bitcoin and Ethereum. Okay, up 4%, up 7%. Those are respectable moves, but this is all in the context of them being down 30-40% over the past 6 weeks. This is just a bounce, just a little bounce from the shelling that has been happening in the crypto market. Let's go in and take a look at some of these charts, and let's get a look at the broad market first, and then we'll take a look at where all of the currencies are. We already took a look at the S&P of equities. They're super bullish. Here is bonds, the US 10-year bond. You can see it is super bearish. It is looking like it wants to break lower. I have no reason to believe that the bonds don't continue to go a little lower. Now look, they're not going to plummet. Bonds plummet for one of two reasons. They plummet because they think that the economy is going bad. Well, that's not the case. No one thinks that. And they plummet because they think that the central bank is about to go on an aggressive rate cutting spree. Well, that's not going to happen either. They're looking at probably one rate cut this year, maybe two. This is probably about the range we're going to get into. Maybe we get down into the lower fours. But I think 4 to 4.3 is probably the range we're going to see in the bond market. And this is what I was talking about with the cryptos. This is the crypto basket. Look, it's encouraging. At least it's not going down anymore. I mean, this thing has just been going straight down for 6 weeks. And we're getting a bounce here. But take a look at this bounce. There is nothing in this bounce that tells you it is a trend change. We've had bounces here, ultimately failed utterly. We've had bases, little bounces. Everything has failed until we have a pullback that makes a higher low and then a breakout higher. You really cannot get excited about cryptos at all. So cryptos for me are completely on the shelf. Next week, we have a ton of inflation news. On Tuesday, we've got Canadian inflation. Take a look at that. If you're trading the CAD, you better know about that. Tuesday night, we've got Kiwi inflation. I would not be surprised if this number came out weaker than expected, which is why the RBNZ was so dovish. Look, if this number comes out at 0.5 or higher, the market may rethink the RBNZ's comments and give the Kiwi a little bit of a bid. I still don't like the trade long at all. I'd much rather be short on Kiwi. We've got CPI out of the UK. And then I want to go back to this one here after we're talking about inflation reports. Retail sales. I've heard a lot of analysts and people talking about this number being fairly important. So we've had this slowing of U.S. economic growth. If we take a look at what's happened at the first 6 months of this year, what has happened is growth has been much stronger than everyone, including the Fed, has inspected, and inflation, the first couple of months of this year, was much higher than everyone thought. So we had this economy that everyone thought was going to be slowing was cranking. Over the last 2 months, we have seen an economy that is slowing. We actually are slowing a bit in the U.S. economy, which is why this inflation is coming down. I believe it was last week I said we're in this Goldilocks period where a slowing economy is really good for everything. At some point, the slowing economy, if it's going too slow, starts to become a problem. And it's weird. I've seen this before in the market in my 27 years, where it's like the same news doesn't matter, and then one day it matters. I'm wondering if this retail sales report is this. If this retail sales report is really weak, we actually may start to see the market worry about lower economic activity. We've got Aussie employment report. So as you can see, just a ton of news to trade this next week. And we have UK employment, and we have the euro. We got the ECB that's going to be announcing they are looking to keep rates as is, but the ECB has been fairly dovish overall. Followed up with retail sales and in the UK and in Canada. As you can see, it is a absolutely packed week with news. I think this is going to be another great trading week. So let's go in, look at all the currencies, score them +3 to -3. That's going to tell us where we want to hunt this next week. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? I'm going to go through cryptos quickly because you know my overall viewpoint on cryptos is that there's no reason at all to take a look at them. And when we take a look at Bitcoin, it's looking worse than the basket. We're not even bouncing. We're just basing and then falling. We're basing. We're not even really bouncing here in Bitcoin. We're just not going down. That's it. So for me, this is just a bad sign. We're getting a little bounce in Bitcoin Cash, but we're just simply up to resistance levels. There is no reason to get excited whatsoever in any of these bounces to be fooled into going long. Ethereum, it's just a bounce. Litecoin, just a bounce. There's nothing in these charts. Nothing in these charts that say that this downtrend is over. So for me, I am completely just erasing crypto from my memory at this point. It doesn't even exist. I'll come back later when it is existing. Okay, take us through dollar, yen, some of the other currencies.
Absolutely. Well, let's just take a look at some of these currency baskets and let's start with the dollar. Well, here we are at the bottom end of the range. So, we've had a lot of chats about dollar, and I've been pretty clear that this is a range-bound currency. We've seen it break out and falling back lower, and now here we are at the lower end of the range. So question is, could it break lower? I think this is going to come down to the economic data that just Rob pointed out. I think some of the data will fuel that move. So until I get that break, I'm going to be a little cautious, but I'm looking for that confirmation on that break for further breakdown. So that's where we are with the dollar. But I have other currencies like the yen, which you can see on the other hand is rising in the shorter term. But if you look back in time, any of these pops that we get, they easily get sold off. So the question is, how much longer is it going to run? I would say that we are still below that 50-day moving average. So for the shorter term, I will still steer clear. But if this start to fail, I think then we will see a reversal of that dollar yen there. But for now, I think even the velocity looks like it based for a bit, and now it's trying to go higher here. So for the shorter term, the yen is longer or maybe higher, but in the longer term, it's still heading lower. The Swiss franc is the currency that I'm excited about here because remember I talked about last week how I'm just waiting for that score to weaken. Take a look at that one, right below that 50-day moving average, and it looks like it wants to go lower. So compared to the dollar, I'm kind of divided here. Dollar, it has a stronger support, but this one, it looks like it can easily break lower. So I really like Swiss franc short next week, and we'll take a look at some Swiss franc crosses. This again goes on the top of the list. It's weakening their score. Is slow and gradual moving lower, and I like this going to the next week. Now, we take a look at some of the European currencies like the euro and the pound. Take a look at euro. The euro is strong. Velocity, not so much. So this is a mildly bullish compared to the pound, but it's following that suit. I think this definitely want to be looking for buying any pullbacks here. But yeah, this thing is moving along the lines with how pound is. But now let's just take a look at the pound. Pound is the one where the money's going, and clearly this is look extended, looks overbought, but guess what? That's really where the money is flowing into. So the outlook again stays +2 on this one, and velocity is there as well. So pound crosses across the board looks really bullish. So we'll take a look at it when we look at the charts. Now, when we go into some of the growth currencies, and I think this is where CAD, even though CAD had a decent score last week, well, it's just following suit what the USD is doing. Remember, now next month we have Bank of Canada on the horizon too, and we have this CPI numbers that's coming out as well for Canada next week. So if you're looking for the next big trade, I think that's going to be your CAD on Tuesday when we get the inflation number, and if that comes out weaker, I think the probability is going to shoot up for the Bank of Canada cut rates in the next meeting. So this thing can easily fall towards the bottom end of the range. So I'm really looking forward to this one for the inflation report. Now, the Aussie and Kiwi. Well, along the lines of pound, like Aussie's been the one that's been really performing really well. You can see that it pulled back a little bit in the velocity wise. But so far, this is still above the 20, still above the 50. And even if you compare it to the Kiwi, Aussie still looks better. So maybe just jumping in for a little consolidation, but take a look at this, the Kiwi here. And now that's falling below the 20 and 50, and sooner they're going to be converging, crossing 20 is going to cross the 50 here. So I think at this one, we want to be selling any sort of rallies on this one. I don't want to be going long the Kiwi. Again, if I have to go long, I think Aussie is the better play. And we'll take a look at the Aussie Kiwi chart because we are, like I said earlier, we are at the levels that we were, 2023, early 2023. So maybe this is where maybe that divergence will continue on. But it's pretty clear. I'm excited going to next week as, not just dollar, it's the yen moving, it's the Swiss franc moving. A lot of currencies are moving. And this is a good opportunity to take advantage of for this broadening of that rally or the movements that we're seeing.
I agree. I think this is going to be a great week. And it's pretty clear. I mean, look, we have no idea what's actually going to happen. Every week we come on here, we say, hey, this is what the charts are showing you. This is what we think is going to happen based on the trend. And, some weeks, some of the things are pretty accurate and some of the things aren't. But overall, again, we're always on the right side of trends, and that's always going to give you an edge in this market. This week, Euro, Aussie, and Pound. It is crystal clear. And it's crystal clear to me that Pound is number 1, Aussie is number 2, Euro is number 3. As far as what is weak, well, I think it's pretty easy here. Kiwi, CAD, dollar. So we've got 3 currencies that we can play on the long side, 3 currencies on the short side. We have a lot of opportunities available. Now, the velocity score is, what's happening right here, right now. We just looked at trends, kind of longer term. What's happening right now? Well, the only one of those 3 currencies that we really liked on the long side that's showing any momentum at the moment is Pound. So early this week, I think you really just have to be focused on Pound while you're waiting for the Euro and the Aussie to find some strength. But on the short side, we're already seeing the weakness. We can just stay with this weakness here. Early on in the week, it's going to be Pound versus dollar, Swiss franc, and CAD. And then we're going to be watching that Euro and Aussie through the rest of the week to see if we can get some trades. Remember, Aussie has employment report, Euro has the ECB meeting. Those are probably going to be a little bit flat going into those. After those reports, I think they're going to be really nice movers. Let's go take a look at some possible trades. My number 1 cross is Pound Swiss franc in Ankit. I'm guessing that is your number 1 cross as well. Is that correct?
Yes, that is correct. This is the one that really stand out the most to me.
So Pound Swiss franc, we've got momentum, and we've got a little bit more room until we hit some resistance. So we're sitting here at 116.20, up here at 116.70. Looks to be some resistance. We're probably, I would imagine that when we get up to this level, we probably consolidate, maybe pull back a little bit. The big question I have is, does this have enough juice to break out and break through that? And if the answer is yes, then I think you can start to take a look at some levels here that are pretty optimistic on the upside. Now, of course, this is going to be a longer-term viewpoint, but, I don't see any reason why we can't get up to 118 over the next couple weeks. So I do like this one, but we do have to admit that there is some resistance. What I would love to see next week, and we've been talking about this a lot over the past week or two, identifying these strong currencies and getting in on these pullbacks on the wicks. We're talking about getting in when you have a currency that looks really strong and then you're getting a wick on the daily chart. Like right here, we go back to, when it hit 115.30. We could go back and say, okay, 115.30, that was this little pullback right here. This is a great little pullback to get long, and then you got this nice run. Bases, pullbacks, this is what we're looking for. So for right now, Pound Swiss franc, I'm waiting for pullback. It might just be 1 or 2 candles. I'm looking for some small little wick on that daily chart to be able to get in. Sometimes you don't get the pullbacks and you get the bases. So you can also buy base breakouts. So that's really what we're looking at here. Looking to buy pullbacks and base breakouts. We're having a run here, so I want to see a pullback. Pullback to this 115.70 would be a great price to take a look at a new long here. Anka, what do you want to take a look at other than Pound Swiss franc?
Hey Rob, other than pound Swiss franc, Aussie Swiss franc looks very interesting to me as far as the setup goes for a potential breakout. Again, on the daily chart, you can see it's right up against that resistance level. And you know what I find more interesting, Rob, if you want to take a look at weekly chart, and you can see like there's a lot of potential for these things to run, as you can see on a longer term trend. We're clearly not in a downtrend anymore that almost lasted for 2 years. So yeah, I think if this runs, this definitely has a lot more juice behind it. And as you said, if the markets are catching a bit, the market's sentiment remains strong, then we can expect some of these moves to continue and potentially break out to new highs. So that's really what I'm looking at. The Aussie Swiss franc, even Euro Swiss franc, perhaps you want to pull that up. Since Euro also have a +2 in the scoring system, let's take a look at the daily chart. And this is again nicely setting up as well. So this is again a proxy to the pound Swiss franc trade. I think if the pound's taking a little break, then perhaps Euro Swiss franc making a nice pace and potentially going up towards the 98 area, I think. And ultimately, the parity level is the one that I'm actually watching for a break. But yeah, I do like some of the Swiss franc crosses. Like I said, on Swiss franc, we are getting that clarification that it wants to break lower. On the dollar, we're getting good setups too, but I want to see that dollar basket break for me to give that confirmation. But I think there's a lot of opportunities in the next coming week.
Ankit, I love this Euro Swiss franc. This Euro Swiss franc chart looks really nice. We had this nice bottom. We have spent about 6 or 7 days here churning with a nice little breakout here. I actually really like this one at the beginning of the week. It looks like it's already built energy. Like pound Swiss franc, I think it's got to pull back. It's got a base for a little bit. This one has already done that. Looks like it wants to run higher. So I really like this one. Let's also pop in on Aussie Kiwi, just because I think it's a very interesting trade at the moment. Typically, we see these things highly correlated, as you can see. We've been trading between 106 and 110 for about a year and a half. You can see, for the most part, correlated, but then we get these big runs. We get a big run from 103 all the way up to 115, a tank down from 115 all the way to 105. The question is, are we about to go on one of those runs? And when we go on these runs, this is a great trading pair. It's just a great trading pair because it's so positively correlated that when it becomes negatively correlated, it's a really good trend because it's not being pushed around by other market forces. This is just truly, hey, Aussie's better than Kiwi at the moment. And you get really nice trends. And I just want to point out, like, the trends that you see when you get this correlation breakdown, these trends are really easy to stay in because there's not a lot of choppiness. There's not a lot of pullbacks that knock you out. They're just really great trends. I think it's definitely possible that we could be seeing one of these. We have this big expanded range candle, which usually signals that it's time for a pullback or a base. I'm going to be watching this one, I think, later in the week. It looks interesting. Ankit, is there anything else you want to take a look at, or should we wrap this up?
I think let's wrap this up. You got the right one. Aussie Kiwi is the last one that I was looking at. But like I said, CAD will be the one that I'll be looking into next week as well. And those prices, I think, will be good news trading off that.
For the week, it looks like equities are going to probably make a new all-time high. And I do think that the equity market is going to be broadening out. The NVIDIAs, the Microsofts, they might underperform a little bit here over the next couple weeks. I would not be surprised at all if they are flat or lower, but I think the rest of the market is actually going to catch up and push these overall markets higher. I'm more bullish now than I was 2 weeks ago when the markets were making new highs. The reason I'm more bullish is because now more stocks are participating, and I think it's going to broaden out. We like both the Aussie and the pound on the long side, Swiss franc, dollar, and CAD on the short side. Happy trading, everyone. Everyone have a great weekend. Goodbye.